Welcome everybody to another fun-filled and jam-packed episode. I've been away for a couple of days, so hopefully the last few days have been fantastic. Today we've got a star-studded lineup. We've got Keith Richards, we've got Tom Morris, and we've got Catherine Morgan, all coming at you in the next half an hour.
Good morning, everybody. So today we are really interested in hearing about people's bin deliveries, by the sounds of it, in actual fact. So in the chat, if you can pop through whether or not your bins are being emptied, that would be really excellent. And also anything else that people have picked up in the news or things that they're doing with their team, let us know. Start some stuff going in the chat, and we'll pick up on some of those things along the way. I think I'll introduce the news at this point then, in that case. So I think we have Jack today from the New Model Advisor Desk. And Jack, I'm going to hand over to you.
Good morning. Hi, everyone. It's good to see you all. Kicking off the news, I think Will's been doing a little run through on the markets first up. Obviously I haven't done this the last week, but you guys might have noticed the markets have been up and down around the last couple of weeks. This morning the FTSE was actually up slightly. It was up 0.7%. It's probably going to be down by the time I finish speaking, but that might have been a reflection of some comments made by Donald Trump yesterday, where he said he thinks a resolution to the oil dispute between Saudi Arabia and Russia is going to come soon, and that sent the price of oil up about 10%. So I guess there's kind of a feeling now that the US is going to act over the oil dispute going on. And then a few of our stories this morning. So first up is a little piece on the FOS announcing yesterday it's going to freeze its levy, all its levies for this coming year. And it also announced a few other measures which are going to cost about 25 million. So I guess that's kind of good news for UIFAs out there, because it's obviously kind of saving a bit of cash. It's a bit of a good news story, followed by a slightly less good news story with news that SIP provider Barclay Burke, the FSCS, is opening claims against the SIP provider. Now, I'm sure most of you will know that Barclay Burke was the SIP firm at the centre of a long legal battle over whether or not SIP firms have a due diligence duty over the investments they accept. And so obviously they kind of lost that battle and fell into administration last year. And why the FSCS accepting claims against the firm matters is because administrators warned this bill could reach about 158 million. That's paid for by the provider share class, but I think there's a cap on the provider share class. So if that gets reached, then providers can have to contribute less to advisors and pay. So I guess that's why the story matters. And then finally, we've got a little story on the Institute of Directors, calling on the government to include sole director, or small SME director, dividends in the furlough scheme. Obviously, this has been a hot topic in the last week or so since the employee and the self-employed government grant scheme was announced. I'd really encourage everyone to read an excellent piece by Phil Young did for us yesterday on how the furlough scheme can work for advisors. It's really got some really good detail in there about responsibilities advisors have got in terms of if they furlough themselves, because obviously there's a regulatory responsibility there. Basically I'm encouraging everyone to read that piece by Phil, and I guess that's the news. That's okay.
Thank you, Jack, and thank you for being one of the unsung heroes of our profession, because you have to listen to what Donald Trump says, and we only have to get it filtered from you. So very much
Phil Young as well.
And Phil Young as well, yeah. And what are you looking out for today then in the news? What do you think will be happening?
Well, I think there was a story last night from Sky News that that Rishi Sunak's going to make a statement either today or tomorrow, maybe on Friday, or tomorrow's Friday, at the end of the week, but about the government the business loan scheme, because there's been a lot of pressure on them about banks not lending to small businesses and charging high interest rates and asking for personal guarantees. So I think we'll see an announcement from Rishi Sunak either today or tomorrow on that. We've also got another story which we didn't get ready for this morning, but hopefully for mid-morning, about some providers still sending their staff to the offices, which is interesting given the lockdown. So we've had some communication with a few providers, and they've admitted that some of their staff are still going into the offices as they're kind of adapting to this challenge. So I guess that's what we should be looking out for today.
Excellent. We'll be interested to see how that plays out. Thank you. Phil, what's up next?
Thank you, Jack. So now we head over to Chris's cabin, and a fantastic new shirt. I think I've not seen this one. So Chris's cabin, fantastic new shirt for Chris's thought for the day.
Thank you, Phil. I think I'm coming to the conclusion that my family doesn't like me because my wife actually chose this shirt for me this morning. So the financial wellbeing tip today, a couple of points. First of all, firstly, the difference between financial coaching and coaching. Financial coaching, which Catherine Morgan's going to talk about a bit later, is all about helping people to understand their relationship with money. Needs a lot of training, a lot of skills, a lot of techniques to use. Coaching skills, that is something it's not completely different, but it's a technique about listening and questioning. And it doesn't necessarily have to be about money. It can obviously be about absolutely anything. So I'm trained as a business coach. Catherine is trained as a financial coach, and the two things are different. And what I think is that you can use some of the basic coaching skills to help people work out what their purpose is. So I talked earlier this week about the importance of understanding the difference between somebody's internal and external motivations. An internal motivation is one which you do for your own benefit because you want to achieve something for you. An external motivation is for somebody else. And your financial plan should be based around internal motivations. So how do we help clients to find out their internal motivations, their purpose, their objectives in life, so that we can build a plan around it? And the answer to that is a very simple question. So this is my tip for today, a very simple question to use with the client. When you say to them, maybe what's the purpose of this money, or maybe even something as simple as when do you want to retire? Then when you get the answer, ask a follow-up question, which is along the lines of, when that happens, then what will happen? So when you buy that yacht, to use the cliche, when you buy that yacht, then what will happen? And most importantly, don't then say anything else. Just keep quiet for as long as it takes for the client to give you a really meaningful answer. And that might take a minute of silence, and that's okay. So just ask the question when you get whatever the objective is that they've given you, which is probably something material, probably something external motivation. Just ask the question, when you get that, then what will happen? And then keep quiet. Tomorrow, I'm going to give you some book recommendations if you want to read more up about this kind of stuff. Thanks, Phil.
Excellent, Chris. Thank you very much. And now we're going to move to our interview of the day. And I'm delighted that we're joined by the CEO of the Personal Finance Society, Keith Richards. Good morning, Keith.
Good morning, everyone.
And Keith, we'll get straight into some questions, actually. And first of all, I wanted to ask you about the Personal Finance Society, specifically in terms of what the PFS is doing and what you think the PFS should be focusing on during this particular challenging time.
Yeah, of course. Thanks, Adam. There's a lot of work going on in the background. We've had to cancel and reorganise over 45 events already so far. We're holding our breath for July. Obviously, quite a comprehensive CPD program that we run both quarterly and through specialist events. And then more than that, there's a lot of digital content that is flowing out through the membership, lots of good practice guides. So in very much the same way that you're sharing good practice here, we've got a lot of the market's experts, practitioners that are willingly giving up their expertise to share amongst the community. So how to use social media more smartly, etc. So we've got a key role to play in continuing with CPD. There's no question about it that this kind of crisis ultimately will change the way that we work, I think, forever. So we're already seeing, I think, Adam, you experienced the first day we went into lockdown, the following day we had the Personal Finance Society board, and I've got to say it probably worked better remotely than sometimes it does in person. So almost certainly the cost saving as well will drive some different behaviours. But more than that, we've been evolving our own role and purpose as a professional body, as you know, for the last few years. So we've been very heavily engaged with government and regulator, 2 or 3 meetings a week with FCA. We immediately reached out to different advisor or community groups that we have to get feedback on what it really meant for them, their clients, and we've been feeding that into the FCA. Of course, we were probably the first to challenge the FCA on the relevance in the current climate of the 10% MiFID reporting requirement, and good news was the FCA have relaxed that position. But there's a number of other things that we've asked the FCA to consider relaxing, including some qualification deadlines. We are majorly concerned about things like PII on our community. We're hearing from firms who feed in pretty much daily on some of the challenges they're facing, and PII is a big one. So some firms are particularly concerned about their renewal period falling due during this crisis period, and whether or not that will create a regulatory breach. So there's a lot of work going on, not only to continue supporting members with webinars, digital content, good practice guides, etc., and of course making sure that we're building a program once we come out the other end of this. But it's really important that we're spending a lot of time talking to government regulators. So John Glenn gave us an update. The Economic Secretary to the Treasury gave us an update yesterday. So we're trying to make sure that we continue to act as that conduit to not just talk to the regulator and policymakers, but to make sure that we turn that into relevant information back out into the market, and make sure that they come to us as a point of contact to understand the needs of our profession.
Thank you. And there's a lot of people coming through on the chat actually asking about exams. So should we go straight to exams next then? Obviously, the CII have postponed the upcoming set of exams in April, and also have put back RO bookings. What do you think the plan will be in terms of exams going forward? And one of the questions that's come through is there any possibility that exams might be able to be sat remotely as we go along?
Yeah, it's a really good question. I mean, clearly a massive challenge for us. First time in the CII's history that it's had to cancel exams. We're still obviously planning to run some exams in July. We're continuing to accept and mark coursework during this time, obviously. But all the written exams are automatically rescheduled now to October, with the exception of RO6 and AF7, which have sittings in July. Our online multiple choice question exams can be rebooked from June onwards. So again, we're holding our breath that nothing changes in the meantime. But the good news is, Adam, we are making, we did launch last year a number of qualificator exams with remote invigilation, which worked particularly well. We're just now looking to see if we can scale that up to introduce the opportunity of exams that can be done through remote vigilation, probably from about July onwards.
Excellent stuff. That sounds good. And I know that it's a challenge at this point in time with technology. So that be through some sort of eye tracking recognition type stuff, or is that going to be a human invigilator?
It's actually, at the moment, it's going to be through a human invigilator. I thought that was going to be a technical question. I have to deflect, but as soon as you put the human one in there, yes, it's through human invigilators are where we're using at the present time. And it has worked much better. We had some initial teething problems, but I think that's the way to go.
Excellent. No, that's great news, and I think they reflected in the chat responses there as well. So thank you. So there's been an awful lot of notice in the press over the last couple of days in terms of some relaxations from the FCA in terms of the MiFID II reporting rules. There's talk of a relaxation around capital adequacy rules as well. What do you see as the benefits of that, but also maybe the challenges as well?
Yeah, I think I mean, it's really good. The FCA genuinely are very, very open to all the feedback. I mean, clearly policymakers can't just instantly drop things or relax things without properly considering whether they legally can, for example, or of course, what consequences, unintended consequences that could have on making sure that consumers are appropriately protected during this period as well. They are really keen to have input, so I would encourage anyone that's got some views to please feed them into the Personal Finance ID mailbox, and we'll make sure that those sort of things get straight to the regulator. But I do think things like relaxing capital adequacy is a good indication that the regulator recognises that some firms could be hindered in accessing some of the government business grants because of CAPAD. So they're looking at ways in which they can discount that so that firms are not disadvantaged. But I think firms themselves have to be a bit cautious about the fact that in some instances, the capital adequacy amounts aren't that huge. So if they're having to dip into that, their business is actually already running pretty tight. So I think there's a fine balance. Some of the bigger firms clearly hold much higher CAPAD reserves, which have an impact on their ability to lend business or get business loans. It's slightly different from a small firm. And I think it's a fine balance, Adam, between making sure that you don't make your firm more vulnerable during this period, because CAPAD is really there in truth to allow for an orderly wind up of your firm should it be forced into administration. As I've mentioned earlier, probably our single biggest concern for the profession and a number of good firms is the continuing hardening of the PII market, which shows signs of further hardening, and in fact even the risk that some insurers may well retract themselves from the market, leaving firms completely exposed. I'm particularly concerned when I hear of things like retroactive cover being removed. That worries me immensely, where a good firm simply doing 5 DB cases to existing clients as they felt obliged and committed to do could be now vulnerable to one single claim, could effectively ruin their business forever. So those sort of things we're talking to both government and FCA on. We've had conversations with the FSCS, and we are in dialogue on a potential solution that might help to mitigate that problem.
Yeah, I know you've spoken and written before about the overhaul or potential overhaul of the FSCS levy. Could you tell us a bit more about some of your views on that?
Yeah, I think I mean, we've been talking about it. To be fair, when I was a director at Tenet Group, we did lobby. We had a number of IFAs lobbying their MPs on this. It's probably about 8 years ago. So there's nothing new on the fact that the FSCS was created at a very different point in time. The profession has evolved immensely. In fact, when the FSCS was set up, the market was largely dominated by major composite insurance companies, and they obviously had the ability to self-insure or provide significant compensation pools. That's very different now with an intermediated market. So we have offered a solution for the government for not just focusing on the compensation side, but also on improving consumer education or awareness, engagement and empowerment that would see more people engage in active financial planning, either through a professional or not. But as we all know, the more people that engage, the more likely they are to step off at some point and need professional advice. But what we're really offering is an opportunity to look at funding in a different way, where it comes from the retail investment pool. It's about 5 basis points would create significant fund in a similar way to Pool Re, for anyone who appreciates that. So it would create effectively a significant pool. The sector would still contribute to that pool through a levy. And of course, the pool would act in a not dissimilar way to PI, where there would be an initial excess should a claim be upheld against the firm. But what it would do is it would build, unlike the current way that levies are calculated, it would continue to create an excess, which actually leaves firms then less vulnerable. In fact, it would even provide a solution to runoff cover, which currently is unavailable in the market for any firm looking to exit. So without going into too much detail, we're in discussions with that. We have presented it to the Chancellor, who has now pushed it into HM Treasury, FCA and FSCS. So we're continuing that dialogue in the hope that we'll come up with a sensible solution.
Thank you, Keith. That's very informative. And we always like, at the end of our time, we are approaching that, to ask the final question, and every guest is asked this along the way. So what are you most looking forward to when we're all released from lockdown, Keith? What will be the first thing you go out and do? You know what,
Adam, we were saying that this is going to change the way we work forever. It's been amazing how well the use of digital, I mean, even this breakfast show, for example, is quite innovative in many ways, and you can see how this will continue to shape the future. So well done for putting this on. I've got to say my day-to-day back-to-back meetings in the offices seem to have shifted into back-to-back online meetings, and I really am now starting to miss that personal interaction, socializing with people in the flesh, so to speak. So for me, I'm really looking forward to mixing with people again being the new norm.
Excellent stuff.
So anybody listening to the Financial Wellbeing podcast will be well aware of Tom's money-saving tips. So I'm looking forward to some new ones of these that we can implement during lockdown. So over to Tom.
Hello all. Hope everyone's all right. I was thinking long and hard about these tight-ass Tomo tips. Been doing it for a few years now within the podcast. And I was thinking, well, none of us are spending any money right now. So you might have to store some of these up for when we're actually allowed out and about. So as has been the way, there's always a bit of a mixture of the practical. Some of these you might already know, but I came across some silly ones along the way that people have introduced to me. But I thought I'd start off with a less serious one. And it was my own experience. So what I would recommend to people is marry somebody with small feet. Okay. Right, where am I going with this? So one of the key principles of financial well-being when you have disposable income is spending money on others. And my wife, a little while back, needed some new trainers. So I said, you know what? I got a little bit of spare cash. I'm not spending much at the moment. Why don't we go and pick out some shoes, some running shoes? So we went to the shop and she tried on a few pairs. She quite liked a pair that were size 5.5 that were in the children's section, so no VAT, and a pair that were in the adult section. Now, when she asked me for my opinion, to be frank, I wasn't very honest. I said that the kids' shoes look great, saved myself 20%. So there is my recommendation. Marry somebody with small feet and you save yourself on the VAT. There you go.
Tomo, that's fantastic. I'd expect nothing less. So next up, we have our coaching segment with Catherine. Every Tuesday and some Thursdays, Catherine will take us through some key coaching questions and explore how they can be used to better understand clients. So over to Catherine.
I'm still laughing to myself about the shoes. That's genius. Okay, so good morning, everybody. I've changed my questions slightly there because what I intended this morning because of time. So what I actually wanted to do is a really quick exercise to get you thinking about what your financial comfort zone is this morning. And you can do this on yourself, and you can do this with your client. I'm going to demonstrate this with my hairbands because it's the only thing I could find on my desk. Couldn't find an elastic band. So what I want you to think about is, at what point do you find in your bank account that you start to feel a little bit wobbly? So, is that when your balance gets to zero? Is it when your balance gets to £1,000? Anything less than that, you start to feel like you don't have enough, this kind of feeling of not enoughness? Is it when you dip into overdraft? Is it when you've got less than 5,000? Just chuck in some comments in the chat box. At what point do you feel a little bit nervous about the level in your current account? So Clements is saying £250. See if we can get a couple more in. 3 months expense. I would expect no other response, Chris, other than 3 months financial stability fund from you. That's fantastic. 250 grand. Is that serious, Ben? Adams is 600. Yeah, brilliant, brilliant. So the reason I'm getting you to think about this is that everybody will have their own financial comfort zone. Your clients will have their own financial comfort zone. And one of the great points of conversation, if you're doing a customer review and you wanted to just throw in something a little bit different, is actually ask them what is their financial comfort zone. Because there's two ways that we're motivated. Some of us are motivated towards a goal, so towards achieving something, like we're motivated towards something. And some of us are actually motivated away from pain. It's this kind of loss aversion principle. And actually, it's quite interesting to think about which one are your clients most driven by or towards. So the loss aversion experiment is about, you're twice as likely to feel the pain than you are to feel the pleasure. So if you were to pick up a £20 note on the floor and you find it and nobody, it doesn't belong to anybody else, and you walk into a shop and you're about to go and spend it, and suddenly you lose it, the pain of you losing that £20 is much greater than the pleasure of receiving it in the first place. And this is why often our clients are very driven to pick up the phone during times of economic difficulties, rather than picking up the phone and thanking you when the markets are going up. So just think about what your financial comfort zone level is, because actually what sits within that circle is your comfort level. So anything that tips you outside of that is going to make you feel uncomfortable. So just a little reflection just to think about today. And then what I'll do next time is I'll actually then give you the next step towards what you can do to stretch that comfort zone.
Catherine, thank you very much. And you'll be back with us next week with another one of those, yeah?
I will.
Great stuff. Thank you. So that's the show for today, everybody. Thank you for joining us. Tomorrow, we've got Caroline Stewart, who's going to talk to us about many things paraplanning, but also running a fledgling business in this current environment. And we've also got Steve Martin's Fitness Focus. So bring along your exercise equipment and bike, or anything else that you might want to use, or just a notepad to write down all of those excellent tips. Enjoy your day. We look forward to seeing you tomorrow.